Alright, this video we're going to be covering more higher time frame analysis. The reason why I'm giving so much importance to the higher time frame analysis is because the higher time frame analysis, right, it's the backbone of your trading. If you are in line with the daily time frames and the weekly time frames, you will be in line intraday. Because a lot of the times people will go in and they don't even consider the daily direction. Majority of traders, they don't even consider daily direction. They just see setups without no context. Remember, yeah, there always has to be a bigger narrative. There has to always be a bigger context for your trade. People blindly sell and buy just because they see something on the 15-minute or 5-minute. If you have traded order blocks, yeah, and then your order block fails and price hits your stop loss, it's because you're not in line with a higher narrative. Yeah, you always have to consult your start of your analysis. The top down analysis has to start from the higher time frames. Anything below the daily, anything below the 4 hour is literally for entries. Is literally for entries. Yeah. I spend so much time on the daily and the weeklies, the deciphering where is price likely to draw for the next month. I want to know where price is going to draw to for the next month or the whole week. Then I'm going to have the highest probability in getting in line with price. Yeah. You don't want to be in line with price just for a day. You want to be in line with price for as long as you can. So what I'm going to introduce to you lot today is two things, right? Because they go hand in hand. They complement each other. It's the quarterly shifts and the open float. Now, the market books on two things, yeah? And when I mean the market books, I mean the market operates on two things: delivering liquidity, rebalancing areas of imbalance. Yeah? Each vertical line is showing a quarter. Yeah? Not the quarter that you see normally in the financial year. We're saying the 1st of December, 1st of March, June, September. Yeah? Now, let's apply time and price theory. Just a heads up, time and price theory is fractal as well. Yeah? Remember I told you the kill zones? The kill zones from the Zoom session, right? Those are time and price on an intraday level. We are talking about time and price. As of now, we are going to be talking about time and price on a yearly level because we're on the daily and we want to consider what is price doing throughout the whole entire year. Now, every single significant high and significant low that you're seeing, yeah, at every quarter, what are you seeing happens? At the start of nearly every quarter, you're seeing either a significant move up or a significant move down at the start of most quarters. So here, we're just moving down. Here, we're shooting up. Yeah? Here, we're shooting up. Here, we're shooting up. This is consolidating. And there is a clear reason for why this is consolidating at this one. Now, the next quarter is literally in a few days, March. And let me tell you something how rigged this market is. Do you know what's happening in March in the US economy? They are considering hiking the interest rates. So we will see some sort of volatility in March. Why I wanted to bring this to your attention, yeah? This is going to help you get in line with the bigger narrative. When you look at what is the quarter doing. So now if we have the quarter and we look at the midpoints of the quarter, within the quarter, we see there's always a retracement and then the move. Yeah? So the move, the retracement, and then it moves and it retraces. Where is the main of the retracement happening? In the middle of the quarter. Do you think this is not by chance? There is something called accumulation, manipulation, and distribution. Each month within the quarter, it usually has a specific role to play within each quarter. So we see the month of December, it brings price down. You see January, this consolidation. Yeah. February, comes up, fills this imbalance, takes out all the sellers inside of December and January, price comes back down. Takes out these these sell stops, and price then moves up. Now, again, in the middle of the quarter of this one, April, a significant move. Always consider what month you are in, because you have to consider the month you're in within the quarter you're in. Look at what your quarter's roll is doing. Now, I know that this is, it's easy to say, yes, it's going up. Now, let me introduce to you lot what I have already have introduced on the free channel. There is something called a market structure shift. A market structure shift. When a significant high is broken, so once this high is valid is being disrespected, yeah? This high, when we trade above it, and then we have a retracement down and we find support and we're not taking out a low, once we run this high and price retraces and doesn't take out a significant low, we become bullish. There has been a change. The algorithm changes its sights. It's not looking for taking out sellers anymore. It is looking to take out the buy stops. Look to the left of this. This high, this high. Ultimately, we have this high as well. This is a high as well. Yeah? What did price do? Comes, takes out this high, retraces down, takes out all these highs, and ultimately, we are very close to this high. Yeah? When you have the shift in market structure, yeah? For example, this as well could be considered a shift in market structure. When this high was broken by these candles, and then we come back down and we find a level of support, yeah? You see when this high breaks and the retracement happens, I don't want you lot to trade that. That is a time where you collect data. Your job as a trader is not just trading, not just entering positions. Your job as a trader is collecting data from the market and then placing the trade based off the data that you collected. So once this high that my cursor is on was broken by these candles and price came back down here and we're starting to see a move up again, you can then consider that there's been a change in market structure shift. Yeah, because we've taken out sell side, yeah? We see this low, we see that this high comes up and we break down and we take out this low. Yeah, we take out these lows and now there's a significant move higher. When that significant move higher takes out this high, we will look to get bullish. When this high, this significant high is taken out, and I know it's the daily and it takes time, that's fine. Yeah, we will look to take out this high, this high, this high over time. And what happened? Price did go and deliver. Now, if you want to know the easiest way, what is the algorithm attacking? What is institutional order flow? What is the quote unquote trend? Look at the open float. The open float refers to the open interest within the market. It refers to what the key liquidity points within the market and what is being attacked. Now, this is gonna help make things click for you guys. If you want to know where the daily is going, all you have to look at is what is being violated and what is being respected. So from here, all these moves down, we're seeing what? We're seeing sell stops are being attacked, and every single move up is not even challenging the next high. It's not even getting close to it. Yeah? And then we're breaking down and we're attacking more sell stops. If it is lows that are being attacked and highs are being respected and rejected off, you are bearish. There is no interest in the algorithm. The algorithm is not interested in attacking buyers yet. It is going for sellers. That is why it is attacking sell stops and respecting buy stops. Now, Let's use the open flow in conjunction with the quarterly shift. Yeah. When there is a quarterly shift, what happens in the algorithm? The algorithm will change its sites. It will then start to flip the script. Let's consider this one. Yeah. Let's zoom into this area. We came down from here. We're trading. Yeah. So for example, like this. Yeah. We come up higher. We take out this low. We make a rally up. It doesn't challenge this high. It rejects off of it. And then we attack this low again. Like I said, we are respecting highs and we are attacking lows. So you're bearish. But then you see that they're stalling. They're stalling. Yeah. You see price goes and breaks above this high and this high. So now what are you seeing? You are seeing that highs are being attacked. Okay. That is one of two on the checklists. Now what do we have to wait for? We have to wait to see if what is being respected. Are the lows being respected? We come down. A few candles, rejection. Filling in the gaps. There's still a large gap here. Yeah? But we make a move higher and we're attacking this buy stop. Come down and we attack the buy stop. And we come down and we're attacking buy stops. This candle, yeah? This low. Now, within this, yes, within an uptrend, short term, you need to know the difference between a short term low and the significant lows. This is a significant low. This is internal within the range. Yeah. From here to here, that these are internal because these are the swing. This is the swing point from here to here. Yeah. We don't care about these lows. If it traded down and took out these lows, then we would consider another change in market structure shift. They can happen very frequently. Yeah. But we see that price took out sellers here. It took out sellers to accumulate orders to fund a big move to take up a lot of buyers, a lot of buy stops. Yeah. If the run on sell side is being used to sponsor a big run on buy side, you are in a bullish market. If sell stops are being respected and highs are being attacked, you're in a bullish market. If short-term lows are being taken out to sponsor a bigger move on buy stops, you're in a bullish market. Now let's consider it again. This high and then this high. Now we retrace. Now where do the retracement levels come into? Remember, it all falls back to one thing: delivering liquidity and rebalancing imbalances. The market can't just go one way. Remember, they have to trick people into thinking the shift changes, the trend changes. Now, this is a significant low now. Yeah, this is a significant low. You see, there's been a lot of respect around here. Yeah, quote unquote support zone. Yeah, price rejects off of it, and again, is attacking this high, and ultimately attacks this high. You have to look at the left to know where price is going now. We are respecting sell stops. Yeah, price came up. It's not taking out this low. It's respecting it. Yeah, look at this. Perfect. Yeah, comes up, leaves the imbalance here. Price bounces off the imbalance, move higher. Comes down, fills this imbalance gap, moves higher. It's attacking buyers and respecting sell stops. That is how you know you are in a bullish market. In order to know when the algorithm is changing in terms of a market structure shift, I don't expect you guys to get it straight away. It takes a lot of practice. You need to experience it firsthand. Yeah. And you can experience it firsthand because we're coming into another quarter. Yeah. Always consider the month of the quarter you're in. Because now, in saying that, where is this? This is the middle of the thingy. This is the middle of the quarter. And what do we expect in the middle of the quarter? Usually a retracement. Yeah. Usually a retracement. So this actually has context for the retracement. So we don't really expect a market structure shift there. We usually expect market structure shifts to happen around the quarterly levels. Yeah, because if you make an algorithm, how would you code the algorithm in when to attack significant highs on a higher time frame? On the 23rd or on the 25th or I don't know, on the 17th or on a random day. No, remember, you have to have an algorithm and code it. And the coding is, you wouldn't code it in such a complex way. You'll code it in easy ways. The quarters of the year, you will code quarters into the algorithm because it makes the most sense. Yeah. If X and Y is happening, then at the next quarter, attack or seek liquidity above previous highs is an example of how you might code it. Yeah. Now you see that we trade and we're trading and we're trading and we're trading above these highs on the left. We saw a retracement down and a very big move up. Now remember what I said, yeah? There was this low. If this low, if this violated this low, we would look for a market structure shift. But we're taking out all this. These aren't significant lows. This is internal liquidity. We're not bothered about internal liquidity. Internal liquidity is the ones between the ranges. So from here to here is a range. Yeah. From here is just the internal liquidity. Until this high is broken, then there'll be a new high that makes a range. Or if this low is broken, there'll be a new range. But right now, this is the range of price that we were in. What we saw was price broke above this here. Yeah. Price broke above, and they'll remember what we said. There was an attack on sell stops here under this low. Price did not take out this low. Yeah. Price didn't take out this low, and then we took out all these highs. Yeah. Then we saw it again. Price retraced down, didn't take out this low, and then price took out this high. Now we're at a very key stage, and I expect consolidation until March. And now let's add some context to it. At the start of every single month, what is there? What news event happens on the first of every single Friday? Non-farm payroll. That is the biggest economic driver for the US DXY, yeah, and anything that is crossed to the US dollar. Why does it happen at the start of every month? Sure, it's convenient at every month we do it, but it fits the context of the forex market so perfectly. We will see a consolidation until then, probably. We want to see what gets taken out. This is a time where you reduce your risk trading in the market if you are trading. Simply observe. You want clear targets. You want a clear trade. We want to see, are lows gonna start getting attacked, or are we gonna go and attack more highs? Yeah. If we go and attack more highs, ultimately we will attack this high. And if we do, we have a nice run on all this imbalance here. Yeah. We might get stored at these order blocks. Yeah. And ultimately, if we are truly attacking buy stops, we will attack these equal highs here, which I've had my eyes on for a long time. This is a very pinnacle teaching. There is a lot in here. Now, as we progress more on, I will be teaching you guys when to expect the market structure shifts, when to expect the trends to end. Yeah. As of now, there's a few takeaways. The open float, you need to consider what is the open float because the algorithm will go after the open float, the open interest in the market. Is it more interested in taking the buys or is it sellers? And in knowing that is, if it's interested and we're in a bullish market and the algorithm is chasing higher prices, we will see highs getting violated and lows being respected. In a nutshell, what are you seeing being violated? Are you seeing bearish or bullish order blocks getting respected? Or is it bearish order blocks are getting violated and bullish order blocks are getting respected? These are things that are telltale signs of institutional order flow because they all have their trailed stops here protecting it. Institutions as well are in line with the algorithm. Very large funds, yeah? It's not just us, come on, we're no one, yeah? Lows are being respected whilst highs are being attacked, and we've seen it the whole time. Until there's a market structure shift and we see that lows are being attacked and highs are being respected, there's no chance for me to become bearish. Now, of course, you can have the bearish days. I understand that. This is time and price theory on a yearly level. Yeah, the times that you need to consider are these quarters. The quarters are the times that you want to consider. You want to consider what quarter are you in. Usually at the start of the year, it's always an accumulation phase, like you'll see here. Yeah, December to January. Why? Because it's the holiday season. There's really no trading going on December and January, and New Year's, and there's just so many holidays financially within the start of the year. So you'll usually see an accumulation phase happening. Yeah, like here, you're seeing an accumulation phase happening again. So which way are we going to shoot off after this accumulation phase? You lot are seeing it happen right before your eyes. December is accumulation. December, the first quarter, is always an accumulation phase. Or this is the last quarter, my bad. Yeah? No, this is the first quarter. Accumulation phase. We see the move up. The move up taking out this first high and all these highs here. Yeah? And then what do we see? The second half of the quarter is retracing. Now, the second and the third quarters always make a significant run. They always, the other ones will, the last two quarters make the significant run. Let's see what this quarter does, because when this quarter finishes, it is going to give so much context for the rest of our trading year, guys. This is such a pinnacle moment you guys don't understand. Next month we have if the US economy is increasing the interest rates, and we have NFP as always at the start of every month. This is so important. Now, that's Forex. Let's consider, and if we just apply that to Euro USD, because that was the DXY. So we can see it for the DXY. What do we see? The DXY, what do we see is happening? We see lows are being taken out, highs being respected. Yeah. This short-term high is getting taken out to fuel a bigger move taken out the sell stops. Yeah. Now, if you want to know if a short-term high is likely to get taken out, you always want to consider the significant highs. So this high, yeah, this high is the start of the range. It is the start of the range, yeah. These little highs, you can see they're not significant. Look at the size of them. They're not significant swing points, yeah. You want to find the nice, easy swing points. Those are the significant ones, yeah. And what we had above here, well, we're gonna go over this in imbalance. Actually, there's actually imbalance above here. Yes, I know there's a wick here, but trust me, we'll go over it. There's some techie stuff that we can go over that I'm sure you guys haven't learned yet. Then what happens, yeah? Sell stops being attacked. High doesn't even challenge nowhere near this high. Takes out the sellers. Runs a short-term low into rejection zone. Comes down and this move higher. The start of the new quarter. At the start of the new quarter, by the way, it's likely that you see a run, a quick run, yeah, at the end, on some sort of high or low. So if you're gonna expect, yeah, a high or low to get run, expect it to happen quickly at the start of the quarter. All these sell stops get violated, comes up. This is a significant one. We don't care about this. We don't care about this high. We don't care about this high. These aren't even. I wouldn't even consider these significant at all. We take that out, trade right into this order block. above this high and above this high, we had what? An order block. So we take out this liquidity, take out this liquidity into the order block. Very easy. That's textbook. And I'm going to go into that a lot. There's an actual term for that. It's called offset accumulation. Yeah. Then we break down and we're taking out all these sellers. And then what happens? We got December, we got the first quarter, boring little an accumulation phase. Very, very textbook. Yeah. Very textbook, guys. Knowing the quarter you're in, knowing the open flow, what is being respected, what is being invalidated, yeah, what's being taken out, this is going to help you with your daily biases because then you know if it's lows being taken out and highs being respected, once a high has been made, like this one, on an order block, then you know when it's going to come down, you're likely to take out what? The low. So you're bearish taking out the low. There is no reason for you to become bullish. You can be bullish some days. We're going to go into that when we come intraday level. Right now, this is a high time frame level. Yeah. We want to see, like right here, listen, you guys might think I'm a good trader. I like to think I am. No one is knowing what's happening here. No one. Yeah. This is a time where you sit on your hands. You want to know where is price going to take out. Are we going to go and break lower? Or are we going to take out this high? If we take out this high, we will see this high, this high, this high. We will see them get taken out. We will see this gap get filled. It's just a waiting game. Yeah. And that's one thing I want to tell you guys. You don't have to trade every day. Trade the obvious setups. Trade when it's easy to trade. It's in your power whenever you guys want to trade. I don't want to see you guys taking silly setups just because you feel like you have to trade. You don't have to trade. There is no rush. If it's not a trading day, it's a studying day. Do you get what I'm saying? Let's look at Bitcoin. Same thing applies to Bitcoin. Let me go back and put June. All right. So we see Bitcoin is breaking highs and respecting lows. Now, this is the quarterly, this is the market structure shift. This low is significant. Yeah, this low is significant. When you take out this low, cool, we took out a low, but that's a short-term low. When we took out this low, this is external liquidity now. Yeah, this is external liquidity. When we took out this low, price has got its sights to remove the other lows in the market. Yeah, we retrace up, but where do we retrace up to? Fill in this gap perfectly. This gap, we fill it in perfectly with a retracement. And then what happens? We take out this short-term high and we smoke this sell stop. We smoke that sell stop. We smoke this sell stop. Yeah? This wick, this one here, takes out this wick. Yeah? And then what do we start to see? This is a significant higher. This one trades higher. And we retrace down. Lows are being respected. Breaks up higher. Breaks up higher. Yeah? Now, if this low was going to get violated, we will expect all these lows to get violated again. Yeah. From here to here, it's like you can anchor your fib there. This is the internal liquidity within it. Yeah. These highs are the internal liquidity. These lows were violated in order to sponsor a bigger move. We take out so many buy stops. Yeah. Here and here. Now we're at the new all-time high. If this low gets taken out, we anticipate a market structure shift. Yeah, takes it out, and we're literally staying under the low. Yeah, highs are being respected, break down lower. From here, now this is a significant low. Yeah, this is a significant high, this is a significant low. What's happening? Price is not even, it's not even getting close to the high. The algorithm has got its sights on sell stops. It won't rest until the sell stops are taken out. Now what happens? Taken out. Short-term high, taken out these sellers again. Taken out these sellers. Now we got this, and this. If price trades above this high, it's gonna become interesting for Bitcoin. Yeah, it would become interesting for Bitcoin again. If price will take out this high, and and we're staying above it, and we're starting to see a low get respected, then we accept that there's a market structure shift for Bitcoin. Until now, if we take out this low, say goodbye to 28k. Say goodbye to that one. Yeah, maybe even that one if it decides to. But do you see why it's so pinnacle? Because when coming up to the next quarter, we got interest rates on the like potential rise for interest rates for the US economy that would directly impact this market for Bitcoin. We got NFP coming up as well. What we do have though, if we want to look at this price action here, we have an imbalance. Within the imbalance as well, there's an order block. Yeah, OTE from this high to this low. I'm sure the OTE is around this area. Let's see. I'm anticipating price. If Bitcoin does want to move up, we want to see Bitcoin fill this gap and ultimately come down and break down lower, respecting the high, taking out the sellers. Just as the open float is showing us, it is attacking sell side liquidity. There's a lot to take in this video. Now, what I said is on a daily time frame. We can find examples of market structure shifts on 15 minutes. GBP USD. This high, this low to this high. Yeah. Yes, these equal highs got violated. This high was made. Now we're seeing price coming down. We take out this low. We run up, but this high is being respected, and we break down lower. That is a market structure shift on a 15-minute time frame. The market structure shifts are fractal to the time frame. They happen on all time frames. I am just showing you the daily time frame because that is where we get the bias from. You don't get your bias from the 15-minute. When there's a market structure shift in the daily time frame, there is a shift in our daily biases, and that's what we want, our daily bias. Because once we have our daily bias, it's just about using the daily bias and getting in line with it. Yeah. Then what do we see? Price goes and attacks this sell stop. Attacked basically every possible sell stop in the last 30 days. Yeah. And now we're seeing price again. What's happening? If it takes out this low, let's see if it wants to take out these highs. Yeah. But as of now, what are we seeing? So this low is getting respected. This high is being respected. It's a consolidation. On the daily time frame from the DXY, I want to see it clearly break out to one side. That is when you will expect the best trading to happen. When you are in line with the open float, it's very easy to trade. And that's what we want. We want the easy trades. Any questions? Ask in the question section of the Discord, yeah? And I hope this video is going to help you guys a lot. This is the start to like the deeper teachings within the mentorship. There's a lot to take in from this. Yeah. So I hope this helps you guys. Have a good day. Yeah.